All right, let's talk about what happened. On Thursday, the president announced some crazy tariffs that were worse, much worse, I think, than the market expected. And that sent the market into a downward spiral over the past couple trading days. And there's a strong possibility that the redness in the market will continue next week. The S&P 500 is down almost 14% year to date, and it's 17.4% off of its all-time high just earlier this year. It's now well into correction territory. And the NASDAQ has gotten hit even harder. It is down 21.6%, now officially in a bear market. And now the time has come to check out the damage to my portfolio. That's my big plan this weekend. Assess the damage to my portfolio, figure out what I'm going to do about it, if anything, for next week, and probably watch the Final Four as well. This is sort of like when a storm comes through and now the next day or two later, it's calm enough outside to go out and assess the damage, clean up the branches and leaves that have fallen down, and batten down the hatches because the forecast calls for another potential storm on Monday. I should probably pour myself a drink before doing this, but all I have right now is my trusty coffee, and here we go. It's time to update my portfolio because I'm interested in not only how down it is, because it's definitely down, but what my asset allocation now is at this point, because that will help me determine what, if anything, I'm going to do as far as moves next week. It's bad, but not as bad as I feared. So my portfolio's lost just over 6%, 6.03% since earlier last week. I don't even remember exactly which day I updated this sheet, but it is now down 6% from there. And the loss is closer to 8% from the peak of my portfolio in February. So this isn't fun. Obviously, it's not fun to log into your accounts to see your portfolio go down in value. It never feels good. But since the S&P 500 is down 17.4% from its all-time high, and my portfolio is only down about 8% from its all-time high, I feel like my portfolio is holding up pretty well. And I attribute this to my asset allocation because for a long time, I have not been 100% stocks. For most of my accumulation phase of investing, I've been about 80% stocks, 20% bonds. And then very recently, starting late in 2024, I've shifted that to more of a 70-30 split. So, and more specifically, about 70% stocks, 25% bonds, and 5% cash. And that's cash that's in my investment accounts, not in my checking or savings account. Anyway, I'm down 8%, but it could be worse. It could have been much, much worse. So far, I feel like the structure is still standing, survived the damage, just a few branches and leaves in the yard to clean up. If the sun comes out next week, all is good. Now, I'm not confident that we are going to see sunny skies on Monday. I'm not confident that Trump is going to reverse his decision or announce any sort of negotiations with countries or anything that people are hoping that could happen that would soften or reverse the impact of these really, really high, crazy tariffs that he announced. So as far as what's happened with these tariffs and the market reaction, I am concerned, I am worried, I have to admit, and I'm trying not to spiral off and worry about how this is going to put off my early retirement for years potentially, because if the worst continues to happen, it absolutely could. Like so far, this is nothing. Market corrections, market downturns of any sort are normal and expected. Even a bear market would be bad timing right now, but not out of the question. But since this is the act of one person intentionally pressing a button, basically, to cause economic destruction, this time feels different. And that's how it always is. Every time there is a major market downturn, there's a reason for it. And it always feels like this time is different because it's never the same reason twice. It's always something that we haven't seen before, whether it's a banking crisis that looks unusual and looks like it could bring down the whole financial system, a global pandemic that the likes of which had not been seen for 100 years, or a president that intentionally wrecks the global economy. Every time it feels like this time is different. And here we are again. I feel like this time it's different. The person in charge is the one pressing the button, is the one doing the rug pull. And that's scary. It definitely is scary. But if this time is truly different in that the market never recovers, well, then we've got much more serious problems. So I can't worry about that, but I am worried about the impact to my early retirement plans, absolutely. Now, one thing that has saved the day for me so far and will continue to save the day if the market continues to go down next week and beyond is asset allocation. And I talk about this all the time because I think it's really important to have an asset allocation. An asset allocation is really important because when the market takes a downturn like this, it softens the blow. If I was in 100% stocks and the market's down 20%, my portfolio's down 20%. But if my portfolio is 70% stocks and 30% bonds and stocks go down by the same amount, I'm only down 14%. And that's if bonds do nothing. But if bonds react like they normally do and how they've been reacting during this market downturn, they could actually go up and blunt the impact even more. So maybe it ends up that the market's down 20%, but your portfolio is down only 10%. And that's a lot easier to stomach, a lot easier to bounce back from. And importantly, the bonds, the 30% of bonds in your portfolio, or whatever the percentage, whatever the allocation is that's right for you, that in effect gives you dry powder so that when the market goes down enough, so maybe your asset allocation drops and now you're 65% stocks and 35% bonds, well, then you can take those extra bonds that you have, sell them, buy stocks while they're down, and in effect this way you're buying low. And you can do this in a systematic way. You can do this in a way that takes some of the emotion out of it. Asset allocation is absolutely a way to stay invested no matter the market conditions, stick to your plan, and buy low and sell high and take some of the emotion out of investing when the market makes sudden moves to the downside or to the upside for that matter. It keeps you on plan. Now, the funny thing is that when I look at my asset allocation that I track on this spreadsheet here, it hasn't moved significantly enough for me to make any kind of moves as far as rebalancing. I just don't think it's the time yet. But if we continue to go down next week, or let's say we have one really horrible washout day where we're just down like 20% in one day, a Black Monday style event. After that, absolutely, I'm going to be rebalancing. I'm going to be taking some of my bonds, buying stocks. And if things continue to go down and we are in a protracted long bear market, I might consider adjusting my allocation to be more aggressive. And as the market continues to go down, move closer to an 80% stock, 20% bond situation so that when the market does recover, I can bounce back that much faster. But so far, if you take the market's movement, what it's done so far, it does not concern me much. What I'm concerned about, of course, is what's going to happen next. The political and economic uncertainty absolutely worries me, and this could absolutely be the start of something bigger. And this whole thing could absolutely derail my early retirement plans for I don't know how long. But my asset allocation is what will guide any moves I make in my investment portfolio. And that's what I really want to talk about in this video. So I hope all your portfolios are hanging in there so far. I hope you've got some dry powder in the form of bonds or cash so that if we do go down further, you can take advantage of that. And if not, but you're still in the accumulation phase of investing, well, that's cool too, because every paycheck you can put in more and more money into the market at lower and lower prices, get stocks while they're on sale, and that's a good opportunity for you. It's just us people that are in retirement, close to retirement, thinking about retirement. Yeah, we're the ones that this really hurts. Anyway, that's what I've got for you in this video. You can see more of my thoughts on investing in this video here, and thanks for watching.